Ben, tell us a little bit about the Polar Capital Tech Trust. It's a closed-ended fund, it's an investment trust, and that gives you lots of opportunities because it's a closed-end fund, doesn't it?
Well, the investment trust structure, the closed-end fund structure, allows investment to be done over a longer term. You're not worrying so much about inflows and outflows. The way that we've tended to use the structure, truthfully, has been relatively muted. Some trusts use permanent gearing, perhaps they're generating an income.
By that you mean extra debt on the balance sheet?
Yeah, using bank debt or other kind of mechanisms to be able to gear up the portfolio. We've been typically shy about doing that, not least because the tech sector is a single sector fund, and so there's more volatility associated with that. Also, that our companies usually exhibit fairly significant operational leverage. In other words, when things are going very well, the company's P&Ls look very good, and when they're in reverse, the same is true. And so we've typically allowed the kind of goodness of the portfolio to deliver the returns rather than gearing. But what I do like about the structure, and I should make sure to include this, is that the closed-end fund allows us to invest at the tail, particularly in companies that are perhaps slightly earlier stage or slightly more binary as investments. And so the closed-end fund definitely helps with that.
So I guess you can be a bit more longer term, a little bit more patient with your investing strategy, probably a bit more volatile, but they might pay off big time in the long term. So that allows you to be patient. And what are the kind of things you do in that kind of long tail?
Well, I think the key to our investment process has really been about identifying the most important themes within the technology sector. And right now, there are 8 core themes in the portfolio.
But that could move up and down.
It does tend to move up and down, but the key is to try and make sure that those sectors' themes are being reflected within the portfolio. Having said that, there will always be some very interesting stories or themes at the periphery, or perhaps slightly more nascent. And so we have a choice as a manager. You do either make a big bet or do you exclude it and come back another day. And the tail allows us to make some sort of slightly more binary investments that within a closed-end fund I think are fine. Within an open-ended fund it's more tricky because of the nature of flows.
And presumably the good example of that could be that with one of your core 8 themes you could look at e-commerce, the rise of the internet, all that kind of stuff. And maybe an example on the long tail could be, I don't know, do you guys space?
Yeah, right. So our core themes are around things like payments, e-commerce and so on. But yes, we're very excited about the long-term potential for, say, electric vehicles and autonomous vehicles transforming transportation as we know it today. But let's be clear, we as investors are very focused on when themes hit key inflection points. You only have to look out the window or go into the street to see that electric vehicles and autonomous vehicles are not happening today. And so as investors, we do the work and occasionally we'll make an investment or a small investment in a company that should be participating in some very long-term exciting themes like electric vehicles. So right now I've got investments in the portfolio that may not necessarily bloom over the next 6 months, but that we can buy and gestate in the portfolio over a longer time frame.
So it's important also as well that you invest mainly in listed companies, and unlike some of your competitors who can invest in both public and private companies, you focus pretty much exclusively on publicly listed companies on a stock market.
So what we don't do with the closed-end structure, and some others do this, is we don't invest in private companies. There are a couple of very tiny positions in the portfolio that I inherited a very long time ago that we're still kind of working our way through, but tiny, like 1 or 2 basis points of the portfolio today. As a rule, we don't believe that the kind of risk reward investing in private companies is that attractive, and so we've opted to stick to companies that are in the public domain. They're listed, they trade freely, and I think the real beauty of that is that while the opportunity set for investment is obviously smaller, it means we can't access, of course, Uber and Airbnb and some of the kind of more exciting names that remain in the private market today. It does mean that we are liquid, that we are able to change our minds, and one of the most important dynamics within the tech sector is change, and how fast when it happens, it happens. And so as a manager, I really do want to remain able to change my mind, and that requires, of course, the portfolio to be very liquid.